I'll log out and come back in.
Okay. Well,
it looks like we are live with this week's show. So there we go. Welcome to the Chrisman Commentary presents The Last Word this week, sponsored by PRMG. I cannot talk today. PRMG and FinLocker. Jody is joining us. KP is going to be joining
here.
Camera
we're live. I'm here. We're live, and we're tap dancing as usual. I know Jody she was on. She's coming back in. I know that routine, and we're going to miss Brian View. Don't worry. He doesn't have COVID. He's not sick again. He's just simply traveling. And perfect timing. There's Jody.
OH.
We can see you.
I made it.
Can you give us the latest word on the street with how everything's going with our friends, family, and folks that we don't even know being impacted by the wildfires? Our hearts, thoughts, and prayers are always with them, but it would be great to get a man on the street update.
Well, this is that phase after a natural disaster where you start to see a lot of like the really gut-wrenching videos of personalizing the loss, right? So there's a lot of desensitization of, just everything we see on TV, and it's not even in the news cycle anymore, right? Because there's not like a raging fire burning as much. Although the two major fires are not fully contained yet. If you just get some bad winds, they could still rage on. So certainly a threat. But just to kind of personalize it even more, one of our regional sales managers in the TPO channel, his aunt lived, his mother's sister lived in Altadena, which is the Eaton fire, in the same house for 50 years. And he was showing me videos of him just 2 days ago, personally, visiting the wreckage. And it's like a war zone movie set. It's just, but it's just so real because you're connected in some way to someone who just had that loss. And so unfortunately, it's just, it's that phase. So yeah, there's, I believe 25 people have perished in the fires. And we're over, almost 10,000 structures, I think, or maybe it's 12,500 structures. And I forgot what the acreage was. I had a report on it last night, but it's more than the size of Manhattan. So if you think about that, and Los Angeles is, second largest populous city in America. So it's crazy, it's just very surreal. And so you guys know that PRMG is doing, PRMG Cares, our 501c3. We're set up a little auction and just try and get some money together and just anyone feel compelled to help from a monetary standpoint at the corporate level or whatever, feel free to do it. So thank you for asking.
Yeah, no, I think it's important.
Can we make that link accessible, or do we need to hit you up on LinkedIn? How can we get access to that so that we can contribute?
I will find that link. I think Paul Lucido, who's our CMO, he usually listens to this, so he's Johnny on the spot. He and his team helped create this campaign, so we'll get that link in the chat.
And I saw it posted on your LinkedIn, so if somebody wants to go and scroll through your previous posts, it is there, and folks can find it that way.
Yes.
Yeah, it's been a pretty crappy start to a new year. We usually come out with great optimism in January, and that got squashed on day one. And so we got to figure out how we can turn this year around and get back focused on the positive. I've been talking to friends in the industry, and it's like we're going to restart the year on February the 1st. So for all those who started doing dry January, it's unofficial. So you're going to have to do dry February instead.
It seems like a better plan after what we've gone through in January.
Yeah.
But for those of you coming to IMB here in Austin, and not this coming week, but the week after, good way to reset and talk to folks. Not that I want to bring up football, Jody, given the I guess
here we go.
My horns back here, but given that, but in a football game, sometimes I feel like it's better to come into the first quarter and be down in the first quarter. That you figure out your game plan, you come back stronger for the rest of the game. And if you're up a lot in that first quarter, then oftentimes you get overconfident. So maybe this is the right start to the year. A little bit of negativity, a little bit of like, we don't know what we're going to do, and we are going to come back stronger.
I love the optimism. That didn't work out so well for you. But anyhow.
It almost did. Dang it.
It was close. It was close.
Yeah. No, it was really fun to watch, and I just had to rub it in a little bit because, you know, I'm on the professional football side. I root for the worst team in the league, and so I have to celebrate where I can, which this year is with our Ohio State Buckeyes. So I sent out some messages to all of you. The first thing I wanted to talk about, though, if you don't mind me directing this, is Sandra Thompson departs on Sunday ahead of the inauguration. And I just want to tell you, I've had the opportunity to meet Sandra Thompson and be involved with her. And she made me feel as though for the first time in the industry, that as being an IMB, that we were truly being listened to. And she really valued the perspective of the industry and tried to make changes where she had the ability to make changes. And I just want to, you know, commend her and wish her well into the future, because I saw a real shining light as she was directing FHFA. And thank you to everything that she did in her service. And she really is a servant leader in the industry and has been amazing. And then I saw Bill Pulte was nominated as the FHFA director, but I don't know anything about him. And I was going to research him before the call, but I haven't had time.
Well, I'll tell you what I've researched. And, you know, obviously he comes from the industry, right? He's a home builder. And I can't remember in my career, and not that my memory is long lived or all that great, but I don't remember ever having somebody in a regulatory role that really came from the industry and made their living that way. So I'm actually excited to see if that has an impact, or what kind of an impact that has. Do we end up with more of a voice because this person is in our industry? Now, that also means they're coming with a bias or a perspective from the part of the industry that they come from.
Yep.
Given how impactful housing supply is in affordability, I'm really looking forward to it. So I have a lot, you know me, Jody, I show up with a lot of optimism. So I come in with a lot of optimism where this is concerned.
Yeah, that's awesome.
I'll chime in here. I appreciate the kind words you're saying about Dr. Thompson, because, you know, I've been in those closed door meetings with her and had a one-on-one with her. You know, she traveled quite a bit for that job. And I think my favorite thing that I saw her do was at NAMBA Connect, the organization that Tony Thompson helped found, National Association of Minority Mortgage Bankers. They have like these college age students where they bring them into NAMBA Connect. So it's always in Orlando. And so it's like on a Saturday or Sunday before the show, or maybe, I don't know what day it was this year, but it's like the first thing. They bus all these students in from all over. And, you know, they're, you know, from all different areas, and maybe not necessarily, you know, great areas. It doesn't really matter. They're just looking for people who are interested. And Dr. Sandra Thompson spoke to them. And, you know, when we see her speak, you know, she's got to put her game face. She's got to talk about, you know, their mission and their agenda and the things that they're doing. And when you get her one-on-one, she's super cool. Like I literally talked about, the prior FHFA director's Katz, you know, who I love, by the way. He's great too. But so she's very cool. But I never saw her more happy and like genuinely smiling and excited than when she was telling those college age students about housing and how it's a great career path and just how amazing it is. And so I thought it was super cool to see her do that. And Bill Pulte, I mean, obviously, you know, they're a great builder, Pulte Homes. He's going to do fantastic. we need more houses. Maybe they can ease some regulation, cut through some red tape on getting houses done. I don't think they'll also kind of cut their own throat by saying, yeah, by the way, we think it's unfair that builders have all these incentives in their mortgage companies that you can only get if you only use your mortgage company. I don't think he'll pull that one to the front of the agenda, but I think everything will be laid on the table. And it's always good to see a founder of a company, the namesake of a company, who's done well, who now wants to be a public servant. That says a lot about his character. So I'm pretty excited about that pick.
Well, if you follow him on Twitter, he does a lot of charitable giving, small amounts directly to individuals. It's really been interesting to look at his feed and see what that is over the years. I've actually followed him on Twitter for a number of years. But to Jody's point, still need to do a little bit of research on his standings and his thoughts as he enters into this role. But I look forward to a good working relationship and many good closed door meetings as you talk about, KP, with our incoming leadership for the regulatory bodies. There's a lot going on. They are not signing up for an easy stint. They're stepping into, a little bit of an economic and political mess that we have so much work to do where affordable housing is concerned. My real bright spot in all that is at least it's a bipartisan issue, that everybody is impacted by this and both sides of the aisle are talking about how do we improve housing affordability, because they know we have to do this. I don't think there's always an agreement on what we need to do, and that's where as an industry it's up to us to step up.
So
amen to that.
Yeah, and speaking of the government and regulating bodies, the CFPB has been busy. I think on the bright sides, we'll start with Christie's optimism, and CFPB finalized the rule to remove medical debt from credit reports. And not only will that lead to additional affordable mortgages, they're estimating 22,000, which doesn't seem like a significant amount, but it will remove $49 billion in medical debt. The brightest side that I see from this is, have you ever seen a loan officer when a medical debt comes on the credit report? They start calling underwriting. They start calling the underwriting scenario desk. They start calling their friend and complaining that it's on it. And then they start calling the credit reporting agency, and just like all hell breaks loose because they don't know how to deal with it. So I think that I think that there will be an efficiency gained just by removing it, not to mention how much more affordable housing will be opened up by removing the medical debts.
Well, as a loan officer, whenever I saw medical debt, what I felt like was I was now put in the position of being a collector for something that didn't really impact a mortgage. Because when you think about the reason that we look at collections is because we're looking at somebody's ability to manage their debt. And medical collections, medical debt is completely separate. Most people don't go out and go, you know what? I'd like to go get a medical procedure today. Medical collections that we see for the vast majority, and I realize this is not 100%, but the vast majority, they're not for elective procedures. They are for catastrophic incidences that have occurred. You've been in a car wreck, for whatever reason, you didn't have insurance and you had to go to the ER, or you had something that happened with your kids, somebody got diagnosed with cancer. Like, these are life-changing events that you are really literally unable to plan for. It's not like you're spending money that you shouldn't be spending doing something that you could have done something less expensive for. So why were we penalizing people in the first place for this?
I will just speak to a personal experience on this week and how it shapes when you're going through it. Yeah, obviously medical debt, it is always typically carved out, right? It's usually a one-time expense, or if you have, if you're diabetic, you're constantly having treatments or some kind of kidney disease or something. So my mother had open heart surgery Monday in Dallas. So I flew back home Saturday after that Ohio State victory, and then threw my wife and our kids and family a 43rd birthday party. Then flew back Sunday to be there in early pre 7 a.m. Dallas time, wheeling my mom into the operating room, and then she comes out. Literally cracked chest open, replaced my mitral and aortic valves. And it's a tough surgery. And so, and then in the days to follow, they're sending in these people with their clipboards, who are, hey, well, come to our rehab facility or come to our rehab facility. It's kind of like you're getting hit up while you're laying there, you can't move. And so I'm in there asking, was it covered by Medicare? Is it covered? Is this something, and they're like, it's 100% covered. And so I will say that as expensive as our healthcare system is, selfishly, my mother who's 81, she has a new lease on life because of our government and our great care system. But it was absolutely something that we were cognizant of to say, is this going to give her some undue debt that she can't burden on her own? Not that I wouldn't help pay it a heartbeat, pun absolutely intended, if she needed it, but it shapes, it shapes how you think and how you operate. And that's another pun that was unintended, but that just came out. So I'll just say, I love this. I think it's great. Jody's point's well taken. Hopefully a lot less questions now. And what else is coming down the docket in 25?
Well, I was going to stay on the CFPB and credit, and CFPB sues Experian, so our good friends at the bureaus for unlawfully failing to investigate consumer reports. So it just seems like CFPB's on a spree. They also sued Berkshire Hathaway for the Vanderbilt mortgage, trap people into risky loans. Will we see a shift after Monday in the inauguration and change in administration? Will we see less suing coming down from CFPB, less regulation, or will we see more? I don't know.
Yeah, I read an interesting article. Kate Berry is a phenomenal journalist. She's literally behind the Chrisman commentary, which is just a must read. Kate Berry sporadically puts out articles, but she's a true investigative journalist. And she went into like who the possibilities are of the CFPB and what will go on there. And what was interesting is in the Trump, the Trump first presidency, Mick Mulvaney he ran two agencies, one of them also being the CFPB. So he was, I think he was like Office of Budget Management and also the CFPB, which makes sense because if you're trying to cut costs and your whole thing is like, I've got this Doge group and we're trying to look for ways to cut costs, do you need everybody in every entity? And so if someone's over, financial oversight and the Office of the Management of Budget, they could also then at least look at the CFPB from that perspective, like, what are we spending our money on? Now, having said that, I think it's good for us not to demonize the CFPB, and I know that we have it on this show, because I think in their heart of hearts they are trying to protect the consumer, right? And so, how much of it's overreach, how much of it's headline grabbing? I mean, the Towson case for redlining was the headline case for the last year and a half. It was a $100,000 fine.
Yeah.
So at the end of the day, is all this headline grabbing and stuff, which brings attention to redlining, and obviously we've made all of our lenders stronger. Not that we've ever thought we were redlining, and so there was no there. But if this new administration believes that credit card fees are too high, then that case of returning billions of dollars to consumers, the CFPB just did, is fruitful. And in Kate Berry's article, she mentioned that the Trump administration actually wants to put a cap at 10% of what credit cards can charge. I mean, there's nothing better than that. Recouping fees is one thing, but how about, hey, look, 10% is all you're going to make. You can't charge 24.99%. You're having an undue impact on the poor. And that sounds like a very liberal and progressive thing to say. But this is what Kate wrote that the Trump administration wants to do, is they want to put a cap on credit cards at 10%. And isn't 10% return on borrowed money pretty damn good? Especially if it's on someone.
No. Let's dig into that. A 10% return is phenomenal. But if you're only charging 10%, then you're not getting a 10% return. Because look at the delinquency rate on credit cards and the default rate, and there is no collateral. So if a person decides not to pay, They went out, and this is different than medical debt. They went out and decided to buy something, and maybe they needed it to pay their rent, or, please don't come at me with that. People do pay different things on credit cards, but you're choosing to spend on a credit card, and then you decide not to pay it back. There's very little recourse from the financial institution that lent you that money. So let's talk about what the overall rate is that has to be charged. Maybe there needs to be a profit cap of some sort. And so this is where you get into hurdle rate. And so you say, okay, there needs to be this 10% return. Then there's 2% in cost. Then what if there's 8, and I'm just making these numbers up, by the way, there's 8% in
default.
Right, default that you have to have. Well, so if you add up 10 and 2 and 8, that gives you 20. So it has to be a more constructive conversation than saying, well, credit card companies are making 28%. And I'm not, by the way, trying to defend credit card companies or any such thing. I'm just saying these issues are more complex. And a blanket, this is what it should be, is a really hard place to come from. Now, it's a great headline. It is a great conversation starter. And we absolutely should be having the conversation of where are certain abuses in the system that need to be reined in and need to be looked at in order to better serve our overall population and the consumer. And that is absolutely the right conversation. I just don't necessarily agree that this 10% cap is the right thing.
And if I may, before Jody, I'll give you the last word on that topic. But, to me, it seems like a negotiating starting point from the Trump administration, just like we're going to tariff everybody to death. They're not going to. And they're probably not going to end at 10%. If they land at 15%, and that gives the profit the banks need and helps overcome that hurdle, then they came from 24.99 down to 15 when they started at 10 with the headline. And that ends up being a fair negotiation, I think. But there could be unintended consequences. You know what? Capital One may say, you know what, we're out. Ally Bank may say, we're not going to lend to the poor anymore because we have this higher. I mean, it's like us with government lending. We do manual government underwrites on really tough credit or even no credit or even bad credit. And that was before they got rid of medical debt. And so we take risk. And I got a $15 million problem loan report at PRMG that our co-founder, Robert Holiday, manages, my partner. And we lose millions of dollars every month. But it's to offset the risk of doing loans that serve the underserved. And so it's the same kind of conversation to your point. So I think they'll find some middle ground. But there, of course, are unintended consequences there. I mean, look, there are banks that pull out of our industry, pull out of warehouse lending, pull out of whatever. And so for various reasons, just Wells Fargo, for example, I can't say this is the reason, but if they're getting sued, and of course, they had an incident a few years ago. I feel like they cleaned up their act. They're a great organization, but they had some rogue salespeople just throwing out credit cards and accounts on people they didn't know, and opening accounts for them that they did not know about, and they got sued for billions of dollars. And so then, we got to cut something somewhere. Now they're no longer a warehouse lender in our business. And so I don't know how much of it, is free market versus government regulation kind of shapes the market, but it is a great conversation to be had. And I guess the broader point is that the CFPB is, still going to be protecting consumers. And if they can lower the interest rate for what consumers are charged and figure out how to appease the banks, if it's not 10%, but you're at 25 and you end up at 15, hell, even 20, you won as a consumer and banks lost money, but they didn't lose as bad. And so that's a compromise. That's how Congress works. That's how every deal works. Not everyone gets what they want.
Well, what's interesting, KP, is when you look at credit unions have a legal APR cap of 17.9% on any loan that they make. So this system already exists. I operate under this system. There's not a single credit card that we have that is in that range. We have nothing that exceeds this 17% number. I don't know, not everybody is aware of those things. Not everybody, has the opportunity to join a credit union. I guess maybe they feel that way. I don't know. So I don't think that you're wrong in that it exists today. So why aren't more people taking advantage of it?
Education. The only other thing I wanted to say about the CFPB is that much like Director Thompson, Chopra and his team were listening to lenders. They were open to feedback. When you would take an issue about, the commissions to loan officers versus to brokers and how you can change for the lower to win a deal, they were very open to listening to how that would impact if there was a shift. And it was the same thing throughout. So I think that we've had a few good run of years as in almost like changing. Like, I came from the subprime world. That's how I got into mortgages. And there's always been such this negative aura around mortgage lending. And I really believe that shifted, and we became people that the different administrations could rely on, and they were willing to listen to what we had to say. And I don't think that we felt that until the last 4 to 6 years, really, in the industry. So it hasn't gone unnoticed.
Yeah, I'll say, Christy, shout out to the UFCU Wire team. They're so amazing. I got to deal with them this morning, first thing. I love your group. Go get an account at University Federal Credit Union. I'm telling you, they're amazing. They've been taking care of me since my freshman year in '94. Good point, Jody, about the CFPB listening. I love seeing Bob Brooksmith, president of the NBA, get on stage and, kind of, have these nice little jabs back and forth with CFPB Director Chopra, and look back at, Kathy Kraninger. She's currently the president of the Florida Bankers Association, where I lived for 13 years before moving here 9 years ago to Southern California. I mean, how awesome would it be for, if she went back and, it was like, Return of the Queen, she comes back and she gets to run it again. And what a great thing I would say about the Florida Bankers Association, that they are able to, pull her in and then release her back to, to serve the broader public. I don't know necessarily that's the case, but you can kind of look and see what she did and what Mick Mulvaney did. And I think you would see kind of what some of the thoughts are. It's always interesting in a second term of a president, or when a president knows they're going out the door, they're like, I'm going to ram all this stuff out the door and get it done. My time is limited here. And so be interesting to see if anything past the midterms, because a lot of times incumbent presidents don't keep their majorities in Congress after a midterm. And so they try and get, major key legislation done the first 2 years, like the CHIPS Act, I think was a great act. The Inflation Reduction Act, there's some great things in both of those in the first 2 years of the Biden presidency. We'll see what happens in obviously the first 90 days, this budget, this debt ceiling, will tax cuts get extended, tariffs, policy, all that stuff. And I don't know if you mind me doing a transition here. We got a couple minutes left, but you think that, go ahead.
I have one more thing on regulators listening. If you haven't heard that, due to the work of MBA and many industry advocates, FHFA and the GSEs have updated their, we were supposed to implement in Q4 2025 the new credit scoring models, and the industry said, hey, we're not going to be ready. That's just not enough time. They have announced that is going to be pushed back. So if you haven't already heard that, the advocacy that we do works. And it may not be to the extent of the wins that we would hope to have or that we would desire to have. I mean, I'd love to see credit report charges not be $180, $200. I'd love to see them back being the $15 to $35 they were when I started in the industry. But just because we didn't get that doesn't mean it's not a huge win to have the regulator listen to the industry and say, yes, we know and understand everybody wants to do things to help more people get into houses, but we have to be able to actually do it and have the right timeline. So that is a big win for us at this point. It's very welcome. And it is a function of the regulators listening to us. So thank you for letting me interrupt. Back to you with your final point in the last few minutes.
No, I mean, we've got great partners, Zactus. Maybe they'll push back on the bureaus and FICO and say, okay, well, now that we continue our monopoly, let's roll back, or a monopoly and a tri-merge, let's roll back the prices. What a win that would be for affordable housing in a headline. Fingers crossed, knock on wood. CPI report was favorable. There are several favorable setups for the next 3 inflation reports monthly. And we saw how quickly, boom, 20 basis points rolled right off the 10-year Treasury. I don't know what it's doing this morning, but it would be really nice to see us continue our trend down after this little hiccup of 10-year Treasury yields rising since the September cut. To get more favorable rates like we had in the last couple of days, and have a nice tailwind going into spring purchase season on lower interest rates.
I'm going to vote for that.
With that, I think we need to do the last word. So thank you for Chrisman Commentary and to PRMG and FinLocker as our sponsors. And my last word for this week is, it's actually 2 letters, OH.
Oh.
We can still be friends.
Okay. Yeah. Hey, you know what? I'm Catholic, and I can't say I'm rooting for you or Notre Dame, but I just want to see some good football, injury-free, especially the seniors going into the draft. Let's have a good game. It's MLK weekend, Martin Luther King, or as they said in Coming to America, Martin Luther the King. I am so happy about this holiday, and it's a great one. It's going to be a good weekend. Enjoy it. It's always a pleasure. Is this a KP sandwich right here in the middle of this frame here? Is the meat is always the name of the sandwich. So it was an honor to do my first show with you two lovely ladies. What a great way to kick off January and the new year. Thank you for an awesome show.
Thank you, guys. I will see you both week after next here in Austin, and I hope many of our audience members. Looking forward to seeing anyone who gets the chance to show up at IMB in Austin.
Let's do it.
Awesome. See you there. Have a great weekend.
Bye-bye.
Thank you.